Welcome, it's a Wall Street Station, the new television, the new channel that is dedicated on showcasing you the most important facts about the market, stock market, cryptocurrency, commodities, and any other important financial asset class. So if you don't want to miss anything that have a great impact on the valuations on stocks, cryptos, and so on, please just wonder about subscribing to the channel. But you don't have to trust me, just give me the chance. By the end of this episode I will show you everything. Today's thumbnails title is a how to beat the market. That's kind of a pervasive title, but I will show you with step-by-step basis on how to do it, and I hope you will find it very, very useful. Our episodes will be published every day, weekday, at 8 a.m. ET time. It's New York time. We are live, so you can pop the questions right on the chat. There are no repetitions, so I cannot really erase and cut anything, but I hope this form of communication you will enjoy the most. So without any further ado, let's head on to our today's presentation. So how to beat the market, that's absolutely the one of the crushing questions of lately, what does it mean really, how to beat the market? For everyone, wherever you're from, whether it's US, UK, Asia, it would mean absolutely something else, because it depends on your country's main index performance on a yearly basis. For US, it's 9.8%. For Europe, for German DAX or whatever, it might be a bit lower, because those indexes are supposedly in a more stagnant way and don't their economies are not developing as fast as the US one. But if you are right in Argentina or Venezuela, that absolutely the performance of 100% and up will be highly desirable due to hyperinflation right there, and the stock valuations rising like crazy. So for us, we'll focus on the US situation. Let's just jump up to the question why you cannot beat the market. So to beat the market, you need to have to get rid of every of these aspects. So if you are suffering from the disposition effect, you are buying high and selling low. So right now many investors, many traders are losing their money because they are not buying low and not selling high. They're doing just the opposite of what they should do. So if you just watching a stock when rising, you are normally should think of the possible exit way. And if you are finding the valuable stock or crypto dropping, you should think of a way to enter it in order to beat the market. So you cannot really just lay on the money. You need to just be clever on the market, and being clever will be rewarded. Popularity bias. So when you're falling for this trap, when everyone is investing in Tesla, then you want to possess Tesla shares by all means. So popularity bias is when you are suffering from following the herd, and following the herd is normally on a stock market fiercely punished. So whenever everyone is doing something, you need to better do the opposite. Over concentration So don't put everything into one basket. That's what Warren Buffett said, and I totally agree. So you need to diversify your portfolio, and I will talk about it in a moment. And market misunderstanding is when you don't know the basic facts on the market, how it's built, what's its structure, what does it mean to break the market structure, and what does it mean to form a trend line. So those are just basic facts, but it will help you to navigate in this rough waters of investments. So let's jump to the exact way. So what to do now? And the answer is 100k USD portfolio strategy. That's my constructed portfolio that's consisted of VOO, TLT, ACWI, gold, BTC shares trading. So as you can find right here in a column, percentage in portfolio for every single position. VOO, it's ETF for US stocks. So for SPY, it is the cheapest and most popular, in many cases, ETF for that type of asset class. TLT, it's for bonds. ACWI, it's for a global index that's consisted of many countries such as Japan, United States, of course, Europe, and some others that are also very important in terms of global GDP ratio. Right here you can find BTC and yet of course gold that has a yearly performance. You can find the yearly performance right here with accordingly VOO. For VOO it's about 10%, for TLT upon a 40-year basis it's around 5%, for ACWI it's 10%, for gold 8%, BTC 80%. Yes, I don't know that right now the adoption of BTC is rising. That is why those diminishing returns might be observed for Bitcoin, but still we are right now at the level where this adoption should be boosted up with the CBDC having an introduction out of the Fed's standpoint. This BTC as a equivalent to the normal cash, surveillant and censored cash is absolutely one that may crash in the next year. So BTC is a good point to have in a portfolio. For shares, I would find for you very interesting shares of many stocks or cryptocurrencies. So I have devoted on this 5% of my portfolio, and for trading I will let you know about the best options to trade stocks, commodities or cryptos right away with a percentage portfolio of 10%. And when everything work out right there, and with those percentage points will eventually work out with no anomaly year, typically we should count on this type of supposed portfolio performance. So with that weights on in your wallet, it for the total percentage gain, we would count 5% of growth merely on VOO, 0.75 for TLT, 1 for ACWI, 0.4 for gold. BTC, it's for shares, at least 1, and 2.5 for trading. So why should it work out? So I took the data with yearly performance out of the latest 40 to 50 years, and just for Bitcoin it was throughout recent 10 years. And if we just manage to play out with RSI, so when buying every of those positions with lower than 50 points RSI, that would mean buying merely when the stock or another position is undervalued. What the RSI means, I will just let you know in a this showcase. So when you have, for instance, the SPX right here on a daily basis, when you just enter the TradingView.com, when you have many tickers with charts and just open the indicators of RSI, if it goes below 50, it means the on average this asset class is undervalued. So as of lately, we had the SPY undervalued back in was it at the beginning of May, and that's where this index fallen down by to 45.6 points of RSI on daily, and it was absolutely amazing time to buy. So in a long-term horizon, if you just buy every of those asset classes at RSI below 50, it would mean that in a longer term you are really hedged against any black swans, and your portfolio should grow upon away. So that's about the RSI, and right now let's get back to our portfolio strategy. So summed up, yearly portfolio performance is right now at 14.65% at least. But if you are just getting those positions with RSI lower than 50ish, then you will even get higher percentage point than is just depicted right here. So this is portfolio strategy. If you have any question, just put it in a chat right now, or the comments below the video right after the transmission. Remember about rebalancing every year. So when we have a scenario where any of those performances has an outstanding year, and it has overreached the threshold just assumed in this table. For instance, if the BTC would get to 8% in a total portfolio by the end of a year, we will just redistribute those outstanding gains upon other elements of our portfolio, just to weigh it accordingly to this table. I hope it's everything clear right here. So as you do know, the RSI right now for many of those positions are very high. That's why we are waiting for correction, and the correction should come over upon this year. Supposedly that I would try to prove right in this episode. So trading portfolio will be presented in updated manner on Wall Street Station channel, and you will have all of the updates on YouTube and on Discord if you just manage to catch me up right there. I'll have my links, all my links, in a description of the video, so I will just attach it right there, or right to me directly. So that's 100k portfolio strategy, but just reverting this, no worries if you have less than 100k. It works even for those that have a portfolio of 5k USD. As for lower portfolios, I would guess that it wouldn't really be worth it to just run that portfolio. But since from 5k USD up to at least $1 million, this portfolio strategy will work out very fine, and even up to $10 million, it will work right nice. All right, so let's find out whether we will have a chance to buy VOO and other elements of indexes this year. For this one, we will study the MSCI World Index. That's a very important benchmark for determining interest in risky assets, and if we have the index in a permanent uptrend, there is a greater appetite for crypto and other shares that are more volatile, and also may have a maybe prone more to sentiment rather than the fundamentals. So MSCI World Index and study this gauge will help us in order to find out the possible troughs or highs that are showcasing the undervalued or overvalued territories that will help us to weigh down the portfolio percentage in a specific area or weigh it up accordingly. So we will go through those countries that have a highest GDP global ratio, and those that MSCI World Index is consisted of mainly, so US, Japan, UK and EU. So we'll just go through it with a hope diagram. So hope diagram is this diagram that helps us to find out where in the economic cycle we are currently at. So with hope diagram, we may go through those elements as NAHB for building permits, buildings, ISM for businesses, confidence of consumer, confidence of businesses, consumer confidence of consumer confidence of businesses, and consumer confidence as well. Manufacturing sales right here, cap goods, industrial production, average weekly hours, payrolls, personal income, and core CPI. With all that being said, we may study whether we are right in the on the brink of a upcoming recession, or there is a slow session on the other hand. So we will study any of them, and it's right now the hierarchy has been observed with the most leading indicators from left to the most lagging on your right. So let's jump to the first one, economy, that's United States. And for United States, we have a inverted yield curve, and I will just show you what would it mean for the market. Let me just pop out the chart. So inverted yield curve is the situation where this 10-year bond index is just reverting a 2-year treasury, and normally that situation is considered as a signal of an economic slowdown or recession. Right now, with leading indicators, we are right under the trough, and it means that we might be reverting this tendency, but still we need more power to prove it. So for now, there is more likely, due to the leading indicator, that we might be heading toward a recession rather than the boom period. So this AI boom that we are right now going through on a market is the one that is pushed by sentiment, but not really something that we may call as foundation have foundations of an economy that have a sound ground. So that's one of the possible choke points for the further growth. So what about the next one, that is interest rate? So normally when we are in a rising cycle of interest rates, it means that we are in a contraction in the economy, but when we reverting this, it means we are in a expansion. So right here, as you can find, we are right at the over 5%, and we are expecting for this one to drop with the cuts, interest rate cuts running possibly this year by Fed, but still there are no certainties, there are only probabilities of that to happen. So if the inflation won't pop up once again towards higher territory, we may possibly observe a normalization of that percentage of interest rates. But for now, we are still knocking at the door of possible recession to come, and we are just waiting for something to break out there, as it was back in March with US banks. All right, so let's jump right after. We have NHB builder confidence and home sales rates. So right now, difficulties in accessing construction and development loans are limiting supply on the market, and this one is showing that the possible inflation spiral that may just hit the market, but it's a leading observation, whereas for NHB we have a rising tendency, and for building permits also we are trying to revert this with this inflection point. But for now it's a bit too early to say that housing market is yet going for better, as we can find that home prices has reached a drawdown, and ISM Purchasing Managers Index also right now are sliding lower. So what I could say about the ISM, so for developed countries, the ISM non-machinery may mean more than just the ISM not non-machinery, but the ISM PMI is the very important indicator that also give us a giving us this litmus paper of what we may expect in the future for US economy. So right now those gauges are not very close from being even a bit optimistic. So consumer confidence index right here, we can find that we are right now rebounding out of the trough, but retail sales is still going with a slime pace upside. Right now we are more likely to follow this below mean tendency, and we right now cannot really recover after this COVID pandemic time. So largest increases were recorded in sales of construction materials and gardening equipment for many of those that are wondering about ISM PMIs, and retail sales also does reflect that slowdown in PMIs as a right aftermath. So let's talk about Japan. So when it was about United States, we can find that these leading indicators are showing that the correction for possible buying opportunity will be upon a way possibly in the third or fourth quarter of this year. So don't make a rush in buying this AI boom runaway on the market right now. Just wait for a pullback. What about Japan, that have a second position in GDP growth and the second position in terms of capitalization for MSCI? So there is a spooky tendency that we are right now going through this spread Japan 10 years to United States 10 years bond. So widening 10 to 2 yield spread is right now finding a positive sign, but overall this spread of 10 to 2 year yields for Japan is still highly reversed. So we still have many leading indicators right now under the desired levels. For Japan, also we are right now going through the plateau in leading economies, economic index, and as you can find right here, we cannot rebound very strictly, but the situation is better than it's in the US. In terms of Japan House Price Index, it's rising, so it's kind of a one of the indicator of booming economy, but it's still too early to say that for Japan something that is happening on the index of Nikkei may reflect on the economy in the months to come, as it's many indicators are still becoming a kind of a ball and chain element for the Japanese economy. Japan consumer confidence is right now reviving, and average weekly hours also has jumped up, but I guess I took the wrong chart out of the 18s. So it's since 2007 and 2018. So it was rising, but whether I will, let's find out whether I will manage to find out what's the current one. So average weekly hours for Japan, and let's find out what's right there for. I don't know whether I will find it right away. So I don't have right now the exact chart to show you. So working hours, it's discrepancies around the economies and societies. So I will just prepare it for you in the next episode. Sorry for that. Right now I will just show you this right after I will find it out. So what I mean, these Japanese indexes are in a better position than the US ones. Also, when studying the Tankan index for large non-manufacturing companies, also it's rising, and composite PMI has really took off, but is reverting right now. About European Union, the situation is getting more complicated, and right here you can find the time for landlords when the house prices are starting to revert, but rents are rising. It's also adding up to this inflationary spiral for European Union that has still a problem with this very high prices of goods, whereas house prices it's better for inflation, but worse for the things related to the thriving economy. So that's out of the Eurostat data. Down the rabbit hole, the composite PMI for Euro area is reverting, but consumer confidence is still resilient. And as long as consumer confidence is rising, we may have a positive moods also on indexes of Euro area. But the one of the very strong economy that is in a free fall right now is German's one. So building permits for new dwellings are really trying to seek for the bottom, but right now there is not such. Manufacturing PMI also is dropping below 45 points, and it means that that this leading indicator is finding that the activity in such elements as services, employment, and investments right now is in a real trouble. That's why many of analysts trying to find out the possible opportunity to short German DAX, but right now the index is still going through the right all-time highs, and possibly when the US start to revert, it may just entail the German DAX right after it and move it downwards. France Consumer Confidence Index and Composite PMI going in reverse directions. Composite PMI is dropping, whereas consumer confidence is rising. For UK, the situation on the housing market is stabilizing, but PMI is still seeking for the trough, and the UK is the one of the economy that's still suffering from very high inflation. That's why that's one of the I would say the break for having this thriving mode yet again been turned on. Let's right now find out more about cryptocurrencies, and right here you have two charts. One is depicting the situation on a total market cap of cryptos, and we see that with the increasing evaluation of Bitcoin, the returns of other altcoins also are increased. So that's normal situation where we are right now trying to seek for more risk appetite assets. With this AI boom, many of those cryptos are starting to feel the wave of interest, whereas stablecoins are still suffering from lowering deposits, aside of tethered centralized stablecoins that right now, even though it's been notorious for many years, right now it's a saver, crypto saver, that's where many of capital is just flowing in. So there is a turn away from decentralized stablecoins, but those centralized right now are having a great opportunity to thrive. So this Terra Luna project ecosystem that in 2022 has collapsed, has scared away many of investors in making deposits in those decentralized ones type of assets in terms of stablecoins. But there is a strong trend still on the crypto into allocating the funds into a proof of stake and delegated proof of stake type of mechanism, consensus, and the leaders upon this area is Ethereum, with a very large chunk of total assets locked. The second one is Binance, but as of lately, due to the regulatory problems, we could find that Phantom has overtaken Binance in a percentage of total assets locked, with those around of 12% of total assets across the crypto market being locked out there. So that's it, guys, for today. So I'm inviting you for every episode on Wall Street Station channel every weekday 8 a.m. New York's time. You will find us on as well on TikTok, Discord, Twitter, Instagram, Facebook, and LinkedIn. So if you enjoy, just hit the like button, but we'll we are seeing you, I'm seeing you tomorrow, so you may do it tomorrow, you may do it tomorrow that as well. So I'm very glad you decided to pop in. Thank you very much, and tomorrow there will be very interesting topics right away. So bye bye and have a great